Hello, everybody, and welcome to today's episode. And a crazy episode it will be because we all woke up to quite the interesting market, and so crazy episode it will be. And we woke up to to a crazy market this morning. If you're living primarily in the U.S., you slept while you were getting beaten in your sleep. To wake up with bruises. It's more, I don't even know how to explain it.
Put it really nicely there.
Well, listen, if you listen to Nick's Daily Show over on the Trade the Chain channel, you definitely have a pulse on what's going on with the markets from a real granular level. So we're not going to go over that here. Because you're going to have to go there and get that short clip each day to watch as he does it live. What we're going to discuss here are some of the items that are coming up within the news as this all goes down. One of the things is Celsius. Before I get to that, let me just say, nothing Nick and I mention on the show is financial advice. It's complete humor oriented. And it doesn't reflect any sort of advice, doesn't reflect any certain views. It's just us discussing topics, typically in crypto. One of the things, the rumblings that started coming out this morning pretty heavily after the overnight market downturn was news on Celsius. A lot of speculation on Celsius, particularly because it was triggered with a memo that went out yesterday night, U.S. time, and that was the fact that they decided to put up essentially a gate and stop the withdrawals and the swap functionality on the platform. And so when the market started taking a downturn, this created a lot of panic, and as it should. I mean, we go back to the old phrase of, not your keys, not your coin. But we also, how much centralization needs to be put in place. Now, another side of this argument there are circuit breakers with the traditional stock exchanges. So some people are putting that up and saying, listen, this is to protect and really serve the customer. Would love to hear anybody's thoughts in the comment section on their thoughts on that debate. If you do have funds with Celsius and you're not allowed to trade them or remove them, I feel for you. It's really it's a difficult thing. It's kind of like having your arms bound. What I will disclose is that there's a lot of FUD going around with Celsius. We're not going to, when you take a look at it, please look for sources. Also, we don't know what's really happening behind the curtain. They're a private company. So, this is not anything against Alex Mashinsky or Celsius or anything for them. We're just discussing what we're seeing as the day goes through. But there's a myriad of different things that have to go into a Celsius situation if it is, it's not insolvent. It's just, from what I'm observing, and Nick, correct me if I'm wrong, it's just a liquidity issue, but not a solvency issue. That being said, we're going to discuss a few of the spot-on points of obvious troubles this could cause if it goes into this direction that everybody's thinking of, as well as some systemic stuff. Because there's things that you may not think of, and the broader market will get, toxic if this is all happening. That's true. So, Nick, I want to hear your thoughts on it first. We've been discussing it throughout the day.
Yeah, so I think probably the easiest way to start is let me share my screen to try and paint a bit of a picture of what went down. So, and feel free to step in because this is still a story that we are piecing together live. I think because of the clarity that we get on chain, we know more than we typically would, let's say, if this was a Lehman Brothers style event. But because it's also a private company, like you said, we still don't know everything about their books and whether things are quote unquote safe or secure or solvent or lack thereof. So basically what we know is that on Sunday, or maybe even Saturday, but rumors began to circulate that Celsius was going to start halting withdrawals due to a lack of liquidity. And again, this lack of liquidity, potential insolvency, bankruptcy, these words are, I'm going to try to refrain from specific ones because we really don't know. But what we do know is that they are likely to be able to not serve customers should they want to withdraw their funds. Or I should probably say they would be unable to serve every single customer who wanted to withdraw at the same time. And I think every bank kind of deals with this issue, and it takes a certain type of catalyst. But whatever occurred, they clearly did not manage their assets as well as they probably should have. And it was shown yesterday that everybody got the email who was a Celsius customer or just, had an account, that they were halting withdrawals and they were stopping swaps. That was obviously a big news because it halts a bank run, but it shows that there's systemic issues that the CEO was on Twitter saying would not occur the same day or just the day before. So a lot of hairiness here. We got the email, and then people started to look on chain and realize that at about 22.5K Bitcoin, as of earlier this morning, they would face a massive liquidation, which would further likely hinder their position, potentially make them insolvent. We don't know these things, but a massive amount, $18,000 Bitcoin leverage position is no joke. So eventually what they did is they topped up their liquidation, or they basically topped up the position and decreased their liquidation price to 18,387. So that gives them a large buffer, comparative to what it previously was, and basically gave them more time. I said on Twitter, they now have a fighting chance. Now, what we don't really understand.
Let's say one thing, Nick.
Yeah.
But you were throwing up these stats on Trade the Chain real time, to, keeping everybody abreast. But let's not forget that before that added liquidity was put in there, they came within $200 of liquidation.
Yeah,
$200. Now, I just want everybody. This is the truth. This isn't speculation. This is the truth.
It's on coming within. Yes.
Yeah, so coming within $200 of liquidation price on spot BTC. Folks, think about fiduciary responsibility and if that was responsible. Go ahead.
Yeah, no, I mean, we were talking about this privately, and obviously in the Trade the Chain group. I mean, it was literally, I think it was even less than $200 at one point. It might have been 100, 150, depending on where the wicks lined up. So I mean, a large portion.
It could push it over the liquidation level.
Seriously. And I think you saw a lot of shorts stack up, and we were clearly playing this route. We get a little bit overzealous, too much shorting. I'll completely admit that I placed a little bit too many trades this morning, but winning trades, majority nonetheless. And I think once this, and it was actually, if you look at the chart, basically when the news broke that the liquidation number had changed, that's actually when we saw a relief. So it's very interesting to think about the fundamentals and sentiment in relation to this as well. And we write about this in the Trade the Chain newsletter, so everyone please read that this evening. But the Celsius, it has, if it goes the route that is negative and hurts the company, potentially creates insolvency, bankruptcy, a massive amount of customers aren't able to be serviced, it's likely that we see a Luna style event. I would assume that Celsius was selling off sell tokens to obviously meet their requirements. They're probably selling off assets to create cash to meet certain obligations and meet collateral requirements, I would assume, for however they're saving their company right now. So, if they were to go under, then they would have to start liquidating massive amounts of assets to pay off debtors, creditors. I don't know how it goes for the customers, but clearly, them going down creates contagion across the markets. I think we already felt a lot of it, but I mean, if I move to the next kind of series of tweets, and I'm not going to call anybody here, a true subject matter expert. I mean, they're all Twitter influencers, but these two guys, Nick Carter and Kobe, very well versed on chain, very well versed in operations and traditional finance, and their explanations after doing their research is they don't know either. Nobody really knows the extent of the risk associated with Celsius's obligations. And that is the scary part, because if this is true, they own $2 billion in assets, but have $10 billion in obligations. I don't understand how you make out unscathed. Like, I don't, you maybe make out with, without the company going under, but who's making money in this other than the debtors that come in to save the company, So this has potential for large scale contagion, even from where we sit now, even with the recent sell-off.
Yeah, I agree. And it's something we're definitely watching. We know that we have a lot of members, as well as there's a lot of regular retail folk out there that have used Celsius for quite some time. Again, this is not a dig on Celsius itself. We all know it's tough to create businesses in this market and to make sure that everything is right. We've had Alex Mashinsky on this show in years past. And he has had a successful track record. So this isn't bashing Celsius, it's just bringing to light what we're seeing both on chain and cutting through the noise. A couple of things I want to remind people of is, here first, I'll just do this real quick. As you can see on Trade the Chain's spotlight page, Cell is the #1 trending on Twitter. It's just not doing it for the right reasons. So, be cautious of that. Also, there's risk in what's called how they stake STETH. And so if you don't know what STETH is, it's a way to, in the DeFi space, to stake STETH in order to collateralize loan obligations. It's also supposed to be pegged 1-for-1, and it currently isn't. The massive amount of of staked ETH that Celsius has, they can't even sell it because it's so massive that it will actually just plummet the price even further than it has.
So,
I'm not going to.
So
go ahead.
Quickly on that point, just like for the on-chain, I've been studying this because the STETH peg for ETH is actually a hell of a experiment. I didn't realize how much of an experiment it is. It doesn't need to stay pegged to whatever ETH's price is, which is also fascinating. Also, the ETH that is staked for the collateralized ETH, the staked ETH, is you can't trade it. So the scenario that I'm hearing right now is that basically Celsius has an equal amount of ETH and staked ETH, but the ETH that is actually staked cannot be unlocked until post-merge. So you can't do anything with that other than potentially write down, I will give this to you post-merge at whatever price. You could potentially make that deal. I would undercut the heck out of them for that. And then B, they can trade the staked ETH that they have, the STETH, but in order to do it, that would both not murder the market and themselves. They would have to do OTC. And I don't know who's going to OTC them at a favorable price right now either, that then would not end up getting wind to the market and trickling down into something else on chain. So it's an absolute mess associated with what they have as collateral right now, because they can't trade a single portion of it. Then the other portion they can trade at a massive discount that would likely screw them over anyway. So it's rock in a hard place.
And it's problematic for the DeFi community as well, whether it's companies like Aave and such, because they're all participants in this. This is a way, this particular DeFi mechanism works. What I'm going to do is I'm going to actually post a link to a great article here written by The Block, which it really explains it in dumbed down fashion. So that way you folks can read it and try to understand it more. But this isn't strictly for just Celsius itself as a counterparty. Its contagion potential could ripple through the cryptosphere, as a whole. Another thing I want to bring everybody's attention to is this. Now, I remember when they were doing the raise in 2020, and Tether led a $10 million investment into the DeFi, into the Celsius network. It was strange at the time. There was a pending investigation, I believe, on Tether, and Tether has also lost its peg for a little bit a few weeks ago, as well as I believe today has had, I forget the number off the top of my head from 6 a.m. this morning, but it's had some decent sized redemptions into it as well. So there is a tether play into this, but it gets a little worse. Tether also loaned Celsius $1 billion. Okay, so if you use Tether, there could be some systemic contagion there as well. You got to pay attention to it, but we're just trying to put all these bits together the best we can. We're not, we're just armchair detectives, but letting everybody know what's out there. $1 billion Tether loan, 10 million investment into Celsius itself, as well as DeFi collateralization issues that are going on. Nick, you want to get into the Fed rate?
Yeah. So I know from one depressing thing to the next, right? So when we talk about, I think I just had it pulled up. Let me Federal Reserve. There we go. So this week we have on Wednesday. So tomorrow and Wednesday are the next FOMC meetings. Why is this significant? Well, if you've been watching the Daily Show, reading our newsletter in the community, you know that the Fed plays a very important role for both macroeconomics and risk on assets right now. So commodities and equities and crypto all kind of at the mercy of what Jerome Powell says and many times lack thereof. We just had CPI come in at 8.6%, 0.3% above predicted, 0.1% above the previous month. So inflation not topping. And it's clearly, that I think that started the sell-off that we saw that ended up getting exacerbated by both the staked ETH peg as well as the Celsius issue. So, really just hit with a lot. And then on Wednesday, we have the FOMC meeting, which we've known about and expected a 50-point basis increase, 0.5% increase, however you want to say it. But given the red hot inflation numbers, how high it was, the fact that we clearly have not peaked, or likely have not peaked, I should say, it does seem that the market is currently pricing in a 75-point basis hike for Wednesday, which would be quite a significant increase. And now the back and forth that Alex and I have been discussing is, I think previously, if inflation numbers were not at where they were, the market would rally on a 50-point basis hike because it's a certain fundamental event in which we know that the Fed is doing what they say they would, and it should assist with their plan. Well, since the CPI number was obviously a miss, since a 50-point basis hike does not seem to be something that would allow traders to take the Fed seriously. It's a bit of a joke right now, the fact that they have not done more to combat what we're seeing. And I think if they don't kind of, strengthen their, show their muscles, the market's going to get, long term, it's going to be hurt, and B, inflation's going to run hot. So if the Fed tightens their grip, shows their muscles, goes in really hard, I feel that it'll probably be a bullish event. Will come off this massive slide, and it will probably get some relief. Now, is that a flip of bear to bull? No, but is it not 4 or 5 days of straight red candles? Probably. I think that would be the next catalyst that would say, okay, we've reached a local bottom. Let's have some sort of recovery. Let's go flat. What do you think?
I agree with you. But my own opinion that I've formed is I'd love it just to go, 100 basis points. Just rip the Band-Aid off, let us scream, and get on with it.
I think the market would rally like crazy at 100-point basis hike, honestly.
100%. I think it's the biggest hammer that they have in their pocket. And obviously, optics are not going to do it. Nobody wants to be that official that says, hey, we're raising it 100 basis points. But if you did that, Nick, I agree with you. I think the market would recover much quicker. I think we'd have a really nice rally, and things would go onward. As it stands right now, I think about 25 basis points on a 75-point uptick isn't baked in fully into the market. I think by the time maybe it comes out and they announce it, if the market keeps going like this, it will be. What I want to just touch 2 points before I forget that are completely off to this topic that I forgot and was reminded in the comment section of. If you don't know world famous DJ Crypto, buy the dip, sell the tip. Go over to his YouTube channel, check it out. He does some awesome stuff over there. But he reminded me that I forgot to bring up the Nexo offer on Celsius, because Nexo did put out a tweet with an LOI attached to it. And again, I'll post the Nexo account in the chat here so you guys can take a look at it on your own time. But they did offer to buy Celsius, its remaining, its businesses and certain assets out. Now, why would they do this? I think it's to really bring it to the attention of Celsius. It's also a very aggressive maneuver. How would they go about buying
Great marketing
it out?
Too.
It's great marketing. Operating a sustainable business for 4+ years based on solid fundamental and prudent risk management. So, I mean, that's how they're describing themselves. I know Nexo, I've dealt with Nexo on the institutional side. But what I think we have here is it would be a very complex buyout. It's not about Nexo not having enough money. Anybody can have enough money to, buy another company. But the complexities and intricacies of Celsius's business might be a hindrance to it, whether there's exotic principal trading desks with perpetuals, which have been reported in the past there, whether it's, how are you going to save the rehypothecation of ST with customer funds, and where will the value downgrade to that? So I don't know that we'll see Nexo exactly buy the whole business in entirety. If that was to happen, this is all speculation, gossip. Another thing real quickly is from one of our great Trade the Chain members, Lucas Bradley. We didn't discuss the USDD DPEG and the Tron's injection of 1 billion because there's just so much going on today. So we're going to try to, parse that together tomorrow, and we'll have some more on that because there's so much stuff going on. It's crazy, and we don't want to bore people longer than 15 minutes or so. Nick, back to you, sir.
Oh yeah, I was actually just checking out the charts. I think it might be good, just kind of discuss where things may head in the grand scheme of things. I mean, we're extremely oversold. We have been worse. We have seen worse. I think, so obviously my lines here are going to look a little confusing, and this is probably the hardest part about my job, because I look at this. I mean, you're trying to call a bottom. That's basically what you're trying to do, unless you're intraday trading. And I think, if you're trying to call a bottom, the best way to do it is, typically a long LTF, long time frame, moving averages. And right now the 200-day moving average is currently where Bitcoin is sitting. Well, it actually tapped it. Can we move lower? Certainly. We've done it multiple times. We've never really touched this. So it has not really been old enough. I think we did technically, early, very kind of in that, March 2020 land. We've never really broken through. So, could a Celsius implosion coupled with USDD getting depegged, coupled with, regulation coming up, coupled with SPY dropping, could that bring us lower? Certainly. And I think our magic number was, 19.8, high 1900s or 19 grand. So, very plausible. You really can't call a bottom here. I will say that, weekly RSI has not been this low since, November of 18, worth mentioning. But if we look at SPY, many analysts are now calling for SPY to be at 340. And I use this same style analysis in the show that we had on Friday, and kind of show you what a drawdown may look like. But I think we were up here on Friday, and I said a 5% drawdown would be the recent lows, and we're obviously below the recent lows. But if you look at where we were, starting the week, and I kind of, did my little comparison here, that is about a 13% drawdown from where we are. And it was about 15% from where it was. So, it's very easy to at least where we are now, to assume that, any minute movement in equities will likely be a larger movement in crypto. And I'm still using it as some sort of a weather vane, and until this FUD, meaning the potential of not knowing what is going to happen at the next FOMC meeting, Celsius still hanging over us, and a multitude of other things, it's tough to find a bullish narrative in the short term. And I think that probably the wise decision is to continue to look for scalp short opportunities. And the best way to look for short opportunities is divergence. So, right here was bearish divergence. We obviously moved lower from that divergence. And I think is also moving average touches. So if you consider that a rejection, or RSI went up here, rejected off that moving average, rejected off that moving average, rejected off that moving average, rejected off that moving average. So, and you can actually continue to play this on lower time frames. Reject at this moving average up here, rejected, up, broke out, rejected, broke up, rejected. Now we're trying to find some sort of rhythm around here. But, if we, again, we got some tweezers up here, rejected. I would not be surprised to see this roll over based on where we're at. And I haven't seen a trend flip or anything that gives me confidence moving forward. So this is kind of how I'm playing, is very simplistically. We know that sentiment is extremely bearish. Hourly, we're getting some relief, but obviously that's coming off lower. And I'm looking at the chart, I'm seeing rejection, both off the POC and off of that moving average, and we may continue to move lower. So this is very much how I'm trading it temporarily. And my next kind of big signal is either, complete sentiment flip or FOMC meeting, I guess, along with, Mashinsky coming out and saying, we have all the money in the world, everything's fine. So those are the big catalysts I'm looking for.
Well, take a look. I mean, you were throwing around Bitcoin. We have a little double top for him in there, but let's see what the 24 hours is. There's nothing. There's nothing. I mean, even with the hourly Orion protocol, very bullish on the short term. Hourly, it's been hard, man. It's been really hard.
The lending protocols are the most bearish right now.
Oh yeah. But that's optics, right? I mean, look at Yearn Finance, man. I couldn't even afford Yearn Finance 2 years ago. When it was hitting $80,000. Now it's under $5,000. What are we thinking relatively short term for the market as far as, let's call it a day out, week out? You and I spoke about, you spoke about some of our positions. We some of them locked up in longs going the wrong way, some locked up into shorts and rebounds happening. Are we going to set lower lows from here over the course of the next, call it 24 to 48 hours?
So, and this is, it's tough because of where we are. I would say more likely than not. We had the discussion earlier, and sorry, I was just making sure that I wasn't fuzzy or bleeping out there. My apologies. But so we had the discussion earlier, and basically my
Nick's checking his bags while he talks.
Yeah. The thesis that I gave earlier was that FOMC is likely going to be the big catalyst, considering the overhang that we have now without any sort of clarity or hope for clarity. It would make sense for us to visit new lows in the next 48 hours. I think I hate to say that, well, of course I can never say anything with 100%, but I'm not extremely confident at this, but it makes the most sense given market conditions right now. Celsius will likely still have to sell off some assets. We've got the USDD issue affecting us. We've got the FOMC meeting in 2 days. And it does not seem like SPY is very strong. And we've got a lot of analyst calls for 340, 350, something like that. So, and we did break below the previous lows already. So in my opinion, it would make sense for us to continue to tiptoe underneath the lows and making kind of a lower range. We kind of been forming this kind of 45-degree angle down drop, and I think we're at another 45-degree angle down. We should probably have one more drop and start to consolidate, maybe tomorrow into the evening, tomorrow evening. So I hate to, give advice that I'm not, extremely confident on, but it seems more likely than not. What are your thoughts?
Yeah, we've also spoken, back and forth over the last week or two about conviction and how we've been put into days or multiple days where we don't have conviction. We can't pull that trigger because we're not confident in our own feel or any of the analysis of which direction it's going to go. Now, everybody might look. This doesn't apply to longs. Okay, I mean, if you're a VGX holder, if you're a StormX holder, or any other coin holder, you're in it for the long haul. It doesn't matter. In 3 years, you want to be 30 times wealthier in value than you are now. This goes for the short and midterm trades, scalping. Now, one of the things that I was out to dinner the other night with a hedge fund manager, and we were discussing crypto and what's going on. We've already established that the SPY has been a great indication of crypto's market performance. One thing that I've loved and I've been playing now for about 5 months that's fully decoupled from it is the energy business. And so I've been trading energy as a hedge against crypto and more or less eking out market neutral returns. So I've been doing Boyle, I've been doing UCO, and I've been taking those positions on the opposite sides of my crypto positions because I'm just playing the inflationary measure. As pricing is going up and a levered energy ETF is going up, I'm making more than enough of my losses. It's been beautifully bouncing back and forth on the opposite sync of the crypto markets, just the same way we've been indexing performance with the SPY. So you really got to think out of the box and be creative. I know Nick here has been awesome. I should just call him Mr. Short at this point. He's loved the short position. So, well, I mean,
it's just, right, so it's good trading psychology,
Yeah.
Yeah, no, definitely. Sorry to interrupt the internet back and forth, but I think just the general way to think about trading is don't fight the trend. You hear the words, don't fight the Fed, don't fight the trend until you see a clear reversal, which is typically consolidation formed by a clear break of the range, along with the possibility of bullish divergence on a long-term RSI. To see that trend, why would you fight the trend? Because if you're shorting into bearishness, let's say you pick the wrong level, but if you're confident that over time the market is going to continue to be bearish, you can still save your trade, or you can still walk away, not as hurt as you would have been. So it's just, I'm Mr. Short because clearly the charts have been red candles all the way. But as soon as you start hearing me flip the trend, is when we'll start to hear signals of different types of trade. So of course, longs could have made a shit ton of money, plenty of money. But would you have potentially hurt yourself more often longing than shorting? 100%. So that's how I think about it. You're on mute. Yeah.
The number one comment of the COVID pandemic. Sorry, I was on mute. We're waiting for the Fed. We got a couple days for that. There's a lot of good comments in there. We're going to bring that up tomorrow as we collect more information. We're going to dive into Tether. We're going to dive into the USDD unpegging. And what's really interesting is MicroStrategy. MicroStrategy is, I forget what the liquidation level is. Been paying too much attention to the other side of the market, but I believe they're down approximately about $800 million on their investment, if I'm not mistaken. Yeah, it's so we're going to take a look at that because that can go sideways real quick. I mean, that's I guess the skirt around legal Bitcoin ETF that never came about in the right way. So we'll hit that up tomorrow. All this LTV talk is
So I guess the
big
one part
whales.
about these liquidation numbers, they can put up more collateral. I mean, they can technically make the number go down very, very low. They just have to continue to put up more risk. So, those numbers aren't done deals, but they're definitely meme targets.
Yeah, but you got to remember what some of the MicroStrategy Bitcoin was paid for, and that was with bond offering. That's
Bonds,
I mean, yeah, this isn't principal capital. It's it's like us buying Bitcoin on our credit card.
I don't think they took much profit. They made a massive amount of money, but I don't know if they secured any of it.
No.
So
So
I don't think they secured
we'll dig in. We'll dig into it tomorrow. Nick, I got to appreciate Nick for pulling double duty from his daily show. But we're going to be on a lot this week as we walk through and try to put together the pieces and explain them to you all. So thank you very much. And as the thumbnail represents, hang on to your handlebars. We're going through some crazy times, but we've all been here before, and we'll come out the other end better. So thank you, folks.